Okay, can you hear me now?
Yeah, Michael, can you hear me?
Yes, I can hear you now.
Okay, great. So I think we should be live soon. Let me just check on
Okay,
those on Zoom.
sure,
Yeah.
sure, sure.
All right. Good evening, everyone. I just want to be sure if you can hear me. Hello, good evening.
Yes, I can hear you.
Okay. I'm checking on those on Zoom. I just want to hear from them. If you are on Zoom, can you just put in a message if you can hear me? Okay, great. Okay, great. All right. So, good evening to you all, and it's a pleasure to have you join us this evening. Tonight, we're going to be talking about SNIT and PAYE. Our conversation is going to focus on what these statutory payments are, and then how Bethniel Finance comes in to help with that. On tonight's session, we have an experienced gentleman from the tax space. He's going to be telling us more about SNIT and PAYE, and then also share some insights with us on these statutory payments. So, without much ado, let me ask our guest, Michael, to introduce himself. Thank you. So, Michael, please go ahead.
All right, thank you, and good evening to all of us. My name is Michael from Tax Law GH, and like rightly heard, today's discussion will focus on social security contributions, NETs, as well as pay as you earn, or to be more specific, income taxes on employee incomes, which is what will apply to most of us here, I suppose. So it should be an interactive session, hopefully in a Q&A format. So there's not like me telling you what I know, but to try and see what we can tease out of this discussion. So hopefully it should be a very productive session for all of us, and it should be a good use of your time on this particular evening. So back to you, host. Thank you.
All right. Thank you. So, I'm told we have a little difficulties with those on Zoom. So, kindly give us a few minutes to sort that out. Yeah. So, a second, please.
Okay, that's fine.
Okay, so I'm told that those on Zoom can hear us, but unfortunately they can't see. Mike, I'll be happy if you could share your screen so that the viewers can also get to see you. Yeah. So while you do that, we can start with what statutory payments are. So can you first of all take us through statutory payments? What are they, and why do we have to pay statutory payments?
Can you hear me?
Yes, I can hear you.
Okay, sure. So when it comes to statutory payments, these are payments that you make because they are mandatory. Because I don't think anybody on this call willingly gives a part of their salary to the government. So, for instance, if you earn 10,000 cedis net on a monthly basis, without the PY deduction, you could have gone home with as much as 12,500, right? So the question here is, do we pay statutory payments because we want to or because we have to? And the answer is the latter. Everybody here pays PAYE not because they want to contribute to national development. Maybe there are a few patriotic ones amongst us, but majority of us pay these because they are compulsory payments. So statutory payments are essentially compulsory payments levied on people by a governing body or an authority. So in Ghana, is the Ghana Revenue Authority, which got its power from the GRA Act of 2009. And obviously, is this same act that was passed by our parliament. So government gives power to parliament to pass laws. This same law established GRA and gave GRA power to impose taxes on anybody, obviously in line with the constitution. So statutory payments, to summarize, are compulsory payments. You don't pay them because you want to, you pay them because you have to. Yeah.
Oh, okay. Thank you for that explanation. So, um, when we speak of SNIT, what is SNIT or the institution SNIT? What are they responsible for with regards to statutory payments?
So at a very fundamental level, the Social Security and National Insurance Trust is responsible for managing a part of our three-tier pension scheme in Ghana. So not to bore us with the technicalities, SNIT has gone through a lot of transformation. Where we are now is we have something called a three-tier pension scheme, with tier one and two being very mandatory. 1 second. With tier one and two being mandatory, and then tier three being optional. SNIT is mandated to manage tier one. So if you're asking who SNIT is or what SNIT does, SNIT manages tier one. Tier two and three are managed by approved or SEC approved, NPRA approved fund managers. And these are people who manage the second and third tiers respectively. But SNIT is responsible for managing just the first tier.
Oh, okay, interesting. Okay, um, and then what is in terms of the three-tier system? Can you run us through what it is? I mean, people hear about SNIT payments, tier one, tier two, and tier three, and they don't really understand what these are. So, can you briefly explain to us what the three-tier system is for pensions?
Okay, so that's fine. When it comes to the three-tier system, it dates as far back as 2009 when, may he so rest in peace, ex-president John Evans Atta Mills decided to launch it. Right, obviously they had done some stakeholder consultations to bring this into force. So through different engagements, finally the law was passed, which is the National Pensions Act. Now, this new act is what governs pensions in Ghana. So the law, there was a law in 2008, and there were amendments in 2011, and following all of these amendments, we had further amendments in 2014. So SNIT is set up, obviously, by an old act of parliament, and the job of SNIT is to manage just the first year. Obviously, those who are aware, for our very old colleagues who were under what is known as the Cap 30, they have a different pension scheme. But for all of us on this call, I'm presuming nobody is more than 45 years or 50 years here. Majority of us will be under the new dispensation, the new scheme for SNIT. When it comes to the three-tier system, what is it really about? The first tier is known as the Basic National Social Security Scheme. This is mandatory. If you are in the formal sector, you don't really have an option. unless your employer decides to be truant or decides to be non-compliant, but it's mandatory. The second tier is also mandatory, but it's a defined contributory occupational pension scheme. I'll come to the splits very soon. What percentage goes where? Tier 3 is a provident fund. It's very voluntary, so there's no compulsion on your employer to contribute to Tier 3. But there are benefits to contributing to Tier 3 that many people leave on the table. So to recap, remember I said Tier 1 is mandatory, it's managed by SSNIT. Tier 2 is also mandatory, it's a fully funded and privately managed occupational pension scheme. There are different managers. We have Axis, Petra, all of them. Then the third tier is voluntary, but also fully funded and privately managed, just like tier 2. So difference between tier 2 and 3 is that 2 is mandatory, 3 is voluntary. In terms of the splits, this is going to be specific to people who are employees on this call. If you are an employee, at the end of every month, your employer deducts 5.5% from your basic salary. And it's basic salary. And this is where people get confused. I know of a friend who has a total gross salary of 20,000 Ghana cedis, but his basic salary is less than 3,000 cedis. His net contribution will not be on the entire 20,000, but will be on the 3,000. So I'm sure most of you will see SNIT saying things like the lowest pension was this, or in Ghana, the lowest or the highest salary is this. SNIT only has data on basic salary, right? Because nothing goes to them apart from basic salary. So your employer deducts 5.5% of your basic salary and then tops up something called a matching contribution of 13%. So let's use numbers here. If your basic salary is 5,000 cedis, at the end of every month, your employer deducts 5.5% of that. You will bear that cost. So 5.5% of 5,000 cedis will come to 275 cedis. That is your cost. This money will not come to your bank account when you are paid at the end of the month. It is deducted before taxes, right? Then your employer will use their own funds to fund 13% of your basic salary, known as a matching contribution. So if you are using the same 5,000 cedis example, 13% of 5,000 will come to 650 Ghana cedis. So you realize that your 5.5% and the employer's 13% makes a total of 18.5%. So every month, 18.5% of your basic salary will go into managing pensions. I'll come to the details very soon, the split between tier 1 and tier 2. But just know that every month, your employer takes 5.5% of your basic salary, not total salary, basic. Let me also mention here that if you're negotiating, try as much as possible. I know companies that try to make their basic very little. And for those who are listening carefully, I'm sure you can realize why they are doing that. Because employers have to pay 13% of your basic salary as your pension. So it is in their favor, it is in their best interest that your basic salary is as low as possible so that their 13% is as low as possible, right? But it is not in your
Yeah.
long-term interest when you come to retirement to have a lower basic salary. So wherever you can, please fight for as high as possible of a basic salary because it affects your contribution. So back to what I was saying, 5.5% you pay for it, 13% your employer uses their money to pay, all from your basic salary as the base. This gives you 18.5%. Now, this 18.5% is what is split. So 13.5% goes to SNIT. Remember, I said SNIT manages tier 1, right? So out of the
Yeah.
18.5, which is 5.5% from you and 13 from your employer, that total of 18.5, your employer takes 13.5% and gives it to SNIT as your tier 1 contribution. And the remaining 5% is paid to a private fund manager of the employer's choice. This is the second tier. Remember, I said tier 1 and 2 are compulsory. So your 18.5 total goes 13.5 to SNIT and 5% to tier 2. It can be anybody. I think the most popular we have now is Petra, right? Almost everyone knows Petra. Now, this might not concern you, this further breakdown, but let's just say for information purposes. Remember, I said 13.5% goes to SNIT, right? Out of this 13.5% that goes to SNIT, SNIT will then give 2.5% to the National Health Insurance Authority for health insurance funding in Ghana. And they'll use just 11% to manage your pension. So out of your 13.5 that goes to SNIT, not everything that goes into funding pensions in Ghana. 2.5% goes to the NHIA for national health insurance purposes, and then the remaining 11% will be used by SNIT for pension management. Remember, I said 5% will go to the second tier scheme, which is the private fund manager. So this is the three-tier scheme on a summary level. We can go into each of the three into details if we would want to, but I can leave it back to the post for now. Thanks.
Okay, all right. Thank you so much for that explanation. That's quite insightful. So, if you are just joining us, this is the Bethniel Finance Spotlight webinar or event, and tonight we are focusing on SNIT and PAYE. So, we have with us Michael, who leads Tax Law GH, explaining to us what really SNIT and then PAYE is about, as well as the different tiers of pension payment. So we started off by looking at what SNIT is as an institution, and then we have just discussed the different tiers. So a lot of times people wonder what the difference is between tier one, tier two, and tier three. But from what Michael has mentioned, you can understand that the tier one is compulsory. So wherever you are working or whatever thing that you are doing, you should always make sure that your employer is paying your tier one, and that is managed by SNIT. So that payment goes to SNIT. And tier two is, I think, it's also compulsory, yeah, but it goes to a private manager. So that can be Access Pensions or Petra or whichever company that your company and the employees decide to go with. So thank you, Michael, for the explanation. I think our audience will be happy to see your face. It's not so easy to see the face behind tax logic, but I would appreciate to see your face anyway. So moving on, I want us to look at PAYE. Why PAYE, or what's the whole um, schedule or understanding behind the PAYE? That's the pay as you earn payment or tax. Yeah.
Okay. I mean, I wish I could. My background is the best. You know, I
Okay,
joined in
okay,
before
okay.
the
That's fine. All
meeting.
right.
No worries. For those who want to put a face to the name, if you go on the Tax Law J Twitter page, I've linked my personal profile there, so I'm sure you can identify who is speaking. If that will help us on this meeting. When it comes to PAYE, it's also a mandatory payment, just that PAYE is a tax. So the difference between SNIT or pension contributions and PAYE is that PAYE is an income tax. As it is called, it is pay as you earn. So you pay it as you are earning. Now, PAYE was introduced so many years ago by um, different territories to manage taxes at source. Because think about it this way: who on this call can be very honest and tell me that if we gave you your salary, the total amount, and we asked you to go and pay to GRA every month, you go and do it? Nobody here will do it, not even myself. I probably might do it, but not on time. GRA needs their taxes by 15th of every month. So, for example, all of us have been paid for the month of July by now, hopefully. I hope no one here gets their salary on the last day of the month. But if you do, for the month of July, your employer has the obligation to pay to the GRA the taxes they took from your salary before the 15th day of the month. 15, right? Now, it's called pay as you earn because it's taken at source. Your employer doesn't wait for you to go and account for it yourself. In fact, the law has put the liability on your employer. If your employer fails to deduct the tax, the law or the GRA will go after your employer, not you, because they have been mandated to deduct at source. If they fail to do it, you are really on some level free, right? There are some technicalities behind this, but at the very fundamental level, if your employer fails to withhold, which is the right term, PAYE from your salary, they are in trouble. So PAYE is basically an income tax. It's an income tax on your employment income. And there are different mechanics that go around this. For example, different incomes are taxed in different ways. So if you earn bonus at the end of the year, that bonus is taxed differently from when you earn overtime, if you are paid overtime as an employee over here. And even if you get some benefits from your employment, if they give you a company car, if they give you fuel, the law mandates how that should be taxed, right? And some of us may not know this, but if you get a gift as a result of your employment, that gift is taxable. So if you're a waiter here, you work at a restaurant, and someone comes and gives you a tip, what the law is saying is that you should report the tip to your employer. If they give you 10 cities, tell your employer that I got 10 cities. Your employer should add it to your employment income and tax you. But the question is, which waiter in Ghana, in this current economic environment, work with the employer and report tips that are given to them? So when it comes to PAYE, there are so many things that are taxable that we probably do not think will be taxable. So PAYE, very fundamental level, is income tax on our employment income.
Okay, all right, sure. Thank you about that. So I think everybody on the call now understands what SNIT is, what PAY is, and in the different tier systems. I've seen that a question has come in, but we'll look at the question as we go on. So moving on, let's go back to SNIT and then the tier system. Um, do you I mean, from your experience, do you think that it is worth it paying your tier one to SNIT? I know it's a very
If you ask,
controversial one, but I mean, yeah.
yeah, if you ask me, the answer is yes. But before I answer that into details, I'll give a caveat. Nobody here should depend on SNIT for your retirement. See SNIT as your plan B, right? Do not bank your hopes on SNIT at all. And I'll come to that into details, even though this is not a pension discussion. When it comes to the first year, there are four main benefits, right? So there's a superannuation pension, there's something called the invalidity pension, there's the immigration lump sum, and then the survivor's lump sum. So I'll run through them quickly. The superannuation pension is what you are paid when you are going on retirement, right? So this amount is paid when you've met the minimum requirements of 180 months contribution, that is 15 years. So if you don't contribute for at least 15 years, you don't qualify for this payment. So you can't work for just 5 years and go on pension and expect to say you are going to get a benefit, which is why at least you must be less than 45 years of age before you even be allowed to be onboarded on a tier one scheme, because the minimum requirement you should contribute is 15 years. And as we are aware, in Ghana, the statutory retirement age is 60 years. So you have two options under tier one. You can go for a full pension when you are 60 years, or you can get a reduced pension when you retire at 55 years or above. So there's a formula they use to compute this, not to bore us with the numbers. But anybody who retires 55 years, all the way 55, 56, 57, 8, 9, will definitely get a lower pension than the person who went on retirement at 60. This is the superannuation pension. There are different factors that go into computing this. The first thing is what we call the early retirement reduction factor. So, like I mentioned, anybody who retires at 55 will not get the same pension as the guy who went at 60, because even though they may have the same salary, the same contribution, the guy at 55 will have his pension reduced by this early retirement reduction factor I spoke about. Then there is the amount on which they contribute. It is funny, you may have contributed for 15 years, but they use the average of your three best years' annual salaries. Let me say that again. You may have contributed for 15 years, 45 years, 30 years. What will go into deciding your pension is the average of your three best years. So let's say you started with your employment, you were with a construction firm. Your annual salary the whole year was just 10,000. You worked there for 8 years, so they contribute your pension on that. God made a way, if you believe in God here, and then you got a new job. That job increased your base salary from, let's say, 50,000 cedis a year to 300,000 cedis a year. You worked for 3 years with that organization. And then for some reason, you got laid off. The next job was paying you less than 20,000 cedis the whole year. You may have, and maybe you retired there at where they paid you a very low salary. What they are saying here is that we don't care whether you didn't retire at a very good place, as long as we'll pick the average of the three best years. So since you worked at this best company that paid you over 100,000 cedis annual for 3 years, we'll use the average of those 3 years to determine your pension. What it also means is that do not lose hope if you don't have a good salary now. Just make sure that before you turn 60, you have at least 3 years where you are earning really good. and that is what will determine your pension. That's that's one factor. Then there's something called the pension right, which is the number of months you have contributed. It is not fair for someone who did 50 years contribution to get more than someone who did the whole 50 years of their working life, or 45 years, whatever the magic number is, right? So there's that reduction factor as well. So three things going to determine your pension, and the superannuation one, what they pay you as the pension, periodic pension. That's the average of your 3 best years annual salaries, the pension right, which is the number of contributions you made monthly, the number of months, and then the early age retirement factor. This will be one for those who retire at 60. Now, apart from the superannuation pension, which I mentioned, is what you get when you hear someone saying is SSNIT is paying them their monthly pension. Is this I'm talking about the superannuation? That's what has the dependence variable being your average 3 best year salaries and all of those things I mentioned. There is also the invalidity pension. If for any reason you are incapable of working again because you become permanently physically or mentally disabled, then you are paid this as a lump sum amount, right? So this for this, the condition is that you must have contributed for at least 12 months within the last 36 months before you became invalid, or because before you got the injury. So let's say you work at a construction site, there was an accident, and then you lost your arms and legs. You can't work again. As long as you can get a certified medical board to say that indeed you cannot work again, you submit this to SSNIT. And if you've contributed for at least 1 year out of the past 3 years, then you get the invalidity pension. This is so that those who are disabled are not disadvantaged because they cannot do the full minimum of 15 years, which I mentioned earlier. So there is some benefit here as well. Then there's the immigration lump sum. There used to be a time where non-residents or non-Ghanaian citizens were not mandated to contribute to SSNIT, but the law changed, right? So they are required to contribute. The immigration lump sum is when they are leaving Ghana for good. They are paid the lump sum before they leave. But the condition here is that you must prove to SSNIT that as you are leaving Ghana, you are never coming back here. So you should be able to prove that you are leaving for good. That is the only time they pay your immigration lump sum. If there's any proof, if there's anything to show that you might come back to Ghana, they will delay your payment and ask you to indeed prove. So, for example, if you were working as an expert here with an oil and gas company, you'll need proof from your employer that your contract has been terminated. You'll need proof that the employer should even probably undertake that they're not going to hire you again. And you'll probably need proof from your country of residence that indeed you are going and you are not returning to Ghana. So that's the immigration lump sum for non-Ghanaian members who did SSNIT contributions and are leaving for good. Then there's a survivor's lump sum. This is paid to your nominated dependents when you die, whether you are in service or on pension. Now, take note, if you die after the age of 75, you do not get, there's no survivor's lump sum for your dependents, right? Takeaway points here is that please make sure that your records with SSNIT are up to date. I'm not wishing death on anyone, but should you pass, your nominated beneficiary will get the survivor's lump sum if you have your proper records with SSNIT. So these are the four main benefits under the first year for SSNIT. So for your question, which is SSNIT necessary? The answer is yes, because of these benefits under SSNIT.
Okay, thank you for the explanation. So I'm sure maybe someone might be asking why I asked that question, and the reason is because you made mention of a fact which I strongly believe in, is you don't count on SSNIT as your only source of preparation towards retirement, because, like you rightly mentioned, if you are going to work for over 10 years, or no matter how many years you're going to be working for, your final payment or what you're going to get is going to be based on the best 3 years of your working career. So let's say maybe you don't happen to have worked in a company that paid you so well for your basic salary, and I mean, imagine that you are going to go on pension and then you're going to rely only on that as your retirement benefits. That would not be ideal, or it would be best. So I was asking just so that, I mean, you talk about the fact that you don't take SSNIT as your only planning for retirement, but you should always look at other forms of investment as well. So thank you, Michael, for that. Before we go to the next um, topic to discuss, I want to just read a question from the chat. So, someone is asking, why isn't tier two voluntary? I don't know how you're going to answer that, but do you have any comments to make about that? Why isn't tier two voluntary?
Okay,
Which I think is voluntary. I don't
I'm not
know.
a I'm not a Liverpool fan, but the answer is tier two never works alone. It works with tier one. So the way the law was structured, the way the contribution was done is such that, you know what, let's not give everything to SSNIT. Let's give private fund managers some portion to invest. This is not the government's position. But if you ask me, what they are doing is to avoid something called concentration risk. Let's not give all the money to SSNIT to manage. Let's give 5% to a private guy to also manage. What this does is that should SSNIT ever go bust, which will never happen because they have government guarantee, right? At least you get your tier two. And then don't forget that your tier two will be given to you as a lump sum when you go on retirement. SSNIT will pay you a monthly pension, but a tier two is a huge amount given to you one time. So it is voluntary. The answer is because they don't work separately. They never work alone, right? But if you ask me why, it's really because we want the private sector to also participate in pension fund management in Ghana and not just give everything to a government mandated entity.
Okay, all right. I hope the question has been answered. So I'm moving to the next question. I don't know if this is a question, but I think the person might be responding to the first one. Let's see, the government of Ghana is looking for your interest when you are not active, when you're not in active service. Tier two is a lump sum of money you get when you go on retirement. Tier one is what SNITs will be paying. Okay, so I think that's just a comment. Another question here. I think you've already answered that from Lillian. Can expatriates contribute to SNITs? I think you explained that. Maybe you'd want to make a comment about it.
Yes, yes, yes. So expatriates who are working in Ghana on a permanent basis are mandated to contribute to SSNIT. Like I mentioned, there is something called the immigration lump sum. So SSNIT is saying that we know you are not Ghanaian. When you are leaving, we'll give your money back to you, take it to your home country. But like I mentioned, you must prove that you are leaving Ghana for good and you're not coming back. And then they'll give you your entire contribution on your way out. So yeah, non-Ghanaians must contribute. Yeah.
Okay. And then there's another question here. Um, can you speak about the cap at SNIT? Is there anything like a cap at SNIT? Maybe if your salary is above a certain amount, or I don't know what she meant by that. If I don't know if it makes
Yes,
sense.
it actually is called
Okay, right.
it's called a maximum insurable earnings amount. So you know I've said that we contribute net on your basic salary, right? Now they have introduced a cap known as a maximum insurable earnings amount to avoid abuse. So you know I told you your net contribution will be based on what your best 3 years, right? And it's your basic salary. So there's a cap on basic salary that I can contribute net on. So it used to be 25,000, it was reviewed 35,000. So it means even if your basic salary is 100,000, there's a cap on which you can contribute for pension purposes, and that is 35,000. That's what the person's asking here. So it's called a maximum insurable earnings. We're not saying don't earn more than 35K, but 35K is what you can contribute to your pension on to a maximum. And someone may ask, is this not unfair? And the answer is no. That is why there's tier three, which is a voluntary scheme. You can put the excess money there. But when it comes to the mandatory ones, you are limited at a cap of 35,000 so that nobody abuses the system. Really, that's it.
Okay, all right. Thank you for that explanation. I think there's been a lot shared. I've also learned a lot personally. So we'll move on to PY. Before I do that, let me just mention briefly that this webinar is a spotlight webinar by Bethniel Finance, and we are basically looking at SNIT and PY payments. So what we have done is to add calculators for SNIT and PY. So if you are joining us this evening, you can calculate your SNIT payment tier one and tier two on Bethniel Finance app, and then you can also calculate your POI on the Bethniel Finance app. You can get Bethniel Finance app on the Play Store or the App Store. We'll be putting the link in the chat. That's for those that are on Zoom. And then those that are on YouTube, you can just visit our website and get access to it. So, Michael, let's come back to you. You explained the benefits of SSNIT, the tier 1, tier 2, and tier 3 payment. Is there any benefit to paying PAY? Why should we pay PAY? I ask because you sometimes look at what's happening in the economy and you ask yourself, is it worth it paying taxes? So, is there anything that you can share on that? Is it that important? Why should employees be interested in paying the pay as you earn? Yeah.
There's only one answer. It doesn't benefit. Okay, well, it benefits you indirectly. The only benefit is they'll tell you they're using the money to build roads and like run the country. That's it. It's a tax, right? So the same benefits that other taxes like VAT that you pay will bring to the nation. PAY is just like that. So you don't have any personal benefits for you paying. Like it doesn't give you anything. For those who don't trust the government anymore, it's another Ghana city going to the government to use to run the nation, as they're saying. So if they have to do one district, one factory, free SHS, your PAYE is going to help fund it. And now they've added 11, right? So it's just another tax that is used to run the nation. It doesn't benefit you in any way by paying PAYE.
Okay, all right. So, thank you for that. PAYE doesn't benefit you. It's actually something that is good, though. It's meant to help contribute to development in the country. So, that's just to take note of. So, I want us to go back to tier 3. Can you share with us some of the benefits of paying tier 3? I know that that is a voluntary payment, and for some companies, that not all companies, I mean, give that benefit to their employees. Not all companies pay tier 3, but I know that there are some benefits to tier 3. You can use it as a collateral to get a mortgage and a few other things. So, can you throw some light on what the tier 3 payment is?
To speak on tier 3, right? And the benefits. That's it, right?
Yeah.
Okay. So, like I mentioned, tier 3 is voluntary, it is not mandatory, right? Tier 1 and tier 2 are the mandatory ones. Tier 3 is a voluntary. Can you hear me?
Yes, we can hear you. I can hear you. Yeah, we can.
I thought it was logged out. All right. So tier 3 is voluntary. It's also privately managed. So I'll give you an example. Petra, who is a private fund manager for pensions in Ghana, manages both tier 2 and tier 3. So for many companies, they do their tier 2 and tier 3 with the same company. In my employer's case, Petra, right? Tier 3 is voluntary. So for example, if your employer does not have any scheme to contribute to tier 3, you can choose to opt out. It's not it's not mandatory. The benefit with tier 3 is that it's supported by tax incentives up to a maximum of 16.5% of your basic salary. So, for example, remember the magic number we used earlier was 18.5, which is your employer takes 5.5% of your basic salary and tops up with what their own 13, making 18.5. Now, aside that 18.5, there's another 16.5% free money. For those who are listening, it's free money. What I mean is that you're not going to pay tax on this 16.5% of your basic salary if you choose to contribute to tier 3. So what the law has done is that it's trying to encourage people to do tier 3. It is not compulsory. If you don't do it, the money comes to your bank account every month, but you pay tax on that extra portion. But if you choose to contribute this amount to your tier 3, then it passes through the net without going through taxes. So if you are aware, Petrol has something called a savings booster. Those who have been seeing, right? It leverages this particular math over here, that an extra 16.5% of your basic salary is available for tax benefits. So if you choose to do this, then you enjoy a tax benefit. But take note, if you are watching carefully, 18.5% tier 1, tier 2, maximum 16.5 tier 3 gives you 35%. It means up to 35% of your basic salary is available to be contributed tax-free, right? You are at liberty to contribute. Don't get me wrong. You can contribute even 90% of your income to tier 3, but you only get up to 16.5% tax benefit. The excess will be taxed so that nobody abuses it. You don't say you're putting all your money in tier 3 and then you evade or you dodge taxes. Now, tier 3, the minimum age for membership is 15 years. You can go as high as 60 years. Now, the way tier 3 works, it's become flexible. It was supposed to be like lump sum payments, but now you can withdraw at different times. Just that there is a tax if you choose to make a withdrawal at some particular point in time. So, for example, if you are in the formal sector and you choose to withdraw your tier 3 benefits before 10 years, there's a tax. If you're in the informal sector, it is 5 years. What I mean is that if you decide that you make your tier 3 contributions, you are in the formal sector, meaning you work with an employer, like formal employment, right? It means your first 10 years, don't touch your tier 3 or else your withdrawal will be taxed. If you're in the informal sector, like market woman, carpenter, and the like, you have 5 years. So your contribution for the first 5 years, don't touch it or else you'll be taxed. The tax rate is 15%. So if you go and withdraw your tier 3 for those listening, and it's not more than 10 years, you pay a tax of 15% on the withdrawal. So it is also in place to encourage people to at least leave their money for 10 years and above. Nothing stops you from going for your money. But just take note that if you take it before 10 years in the formal sector and before 5 years in the informal sector, your withdrawal will suffer a 15% tax. And this is a final tax. It's a withholding tax they pay to the GRA. Now, for those who are listening and are interested in this, the Income Tax Act 896 of 2015 was amended during the COVID period by Act 1017. And it was the provision of law said that if you go and withdraw from your tier 3 and it's because you have lost your job because of COVID-19, then that withdrawal will be exempt from tax. So it means the 15% tax will not be you'll be affected by it. That if you can prove that you are going for your tier 3 because COVID-19 caused you to lose your job. So let's say your employer laid you all off because of COVID-19. You can go to your pension fund manager, maybe Petra or Axis, tell them or prove like, this is my letter. I was laid off. The reason is COVID-19. I've lost my job. So I'm coming for my tier 3. In such a case, you will not suffer the 15% tax, even though you may be going for money for 10 years. In any other case, the 15% tax will apply. So that is it really in terms of your tier 3. And the tier 3 also has the same principles like the tier 1 and 2. Once your nominated beneficiary list is up to date with your fund manager, when you die, a benefit will be paid to them equally. So just make sure your records are up to date. Nobody's praying you die. But in the event that you die, unfortunate event that you die, your nominated beneficiary will be paid. Also, there is that provision where if you are permanently, physically, or mentally disabled, you can also get your benefit paid out to you. Obviously, this will should realistically not suffer the 15% tax because you are going for that money because you are disabled. So that is it really in terms of tier 3. It's, if you ask me, it's a great way to save extra money. You can let your employer do, even if they don't have a tier 3 setup, you can sign up with Petra and then have a personal tier 3 account, right? So there's one that is employer setup, there's one that you can set up as an individual. Set up tier 3, automatic deduction every month, 500 cedis. Before you realize, you'd have accumulated lots of money. That, don't forget, Petra is investing on the market for you. I know Petra uses Blackstar advisors for their fund management. They are doing great. On average, I think they are doing 17%, 18% per annum. That was last year numbers. With high interest rates this year, I'm expecting 2022 numbers to be more than 22, 23%, right? So see it as money you are locking away for 10 years. Assume it doesn't exist. It will earn interest for you. After 10 years, you have money you can use to do anything you want. You can also leave that money till you are 60. When you are going on retirement, you get your tier 2 lump sum, you get your tier 3 lump sum, and then SNIT pays you your monthly pension, which is why I said do not depend on SNIT for your pension. Tier 3 is available. You can utilize that to do your savings, and that will be beneficial because of the tax benefits.
Okay, thank you so much for that explanation. I really think today has been very insightful, and I'm hoping that everyone that has joined us has picked up valuable lessons to apply in their personal finances. So we're going to look at the demo of how you calculate your SNIT and then your PAY on the Bethniel Finance app. The link has been shared on the page that's on the Zoom chat. So if you want to get the app, you can just go to Play Store or App Store to download Bethniel Finance. You can also use the link shared to get the app. Um, So within the next few seconds, you should see on your screen the demo of how the app works. Yeah. So if you are on, you can see on your screen now that the app is running. It's a demo of the app. So Bethniel Finance is basically um, an app that helps you to stay ahead financially. It seeks to help you improve your financial literacy, manage personal finances, and access financial services. And in the month of June, we added an e-levy calculator to the app that allows you to calculate e-levy transactions. I mean, the cost of e-levy, and then we've also added the calculator for SNIT and PAYE. So aside these calculators, there are a lot of other things you can do on the app, like reading articles. You can have access to the financial markets, look at things like cryptocurrency, stocks, forex, and all of that. And in addition to the calculators, we also have the mortgage calculator, a calculator that helps you to get how much you'll be paying as mortgage interest. And there's also the e-levy calculator, like I mentioned. You can just put in the amount you want to transfer, and you should be able to know how much you'll be paying for SNET and PAYE as well. All right, so that brings us to an end of the demo, where you saw how the Bethel Finance works. The Bethel Finance app works. You can get the app from the Play Store or the App Store, like I've mentioned. The links are in the chats. You can download the app also from the Play Store and then the App Store. It's been wonderful listening to Michael as he has explained the SNITs and then the different tiers involved, as well as the POI. So I'll just go and see if there are a few questions, and then if there aren't, we can bring the session to an end. So we have one last question. I'm an entrepreneur and I don't take salary. Can I pay a lump sum, say 20,000 for the entire year to SNIT? Yeah. Mike, will be happy to hear what you have to say about this.
Okay, great. So I'm aware in practice, yes, SNIT has said on their website several times that yes, self-employed persons can come and do SNIT contributions. But if you ask me, why don't you do tier three? And let me explain why. For SNIT, if you are not going on pension, don't give you your money. You get it? Like, I mean, technically, I don't know what their specific rules for self-employed persons are, but the SNIT logic is that we'll give you your money minimum 55 years of age, right? Which is the reduced pension I spoke about, or 60 years and above if you go on the normal pension. Tier 3 is available. There's no cap if you are self-employed. Put all your money there. Since you want to contribute for pension, the logic is that you probably not even touch your money for 10 years, right? Because if you're going to do SNIT, you can't touch it for 15 years plus, right? So if you are going to do um tier three, just see it like if you're a self-employed person, this is your pension touching the money. The temptation is that you know your tier three is available for be tempted to go and say, oh, I want my money. Let me even take the 15% tax hit, right? But for SNIT, nobody goes for their SNIT because we know you can't even go and withdraw it. So the only downside is that for your tier 3, you may be tempted when you don't have money to go and withdraw it. But please do not let that temptation get to you. See it like your pension. Contribute religiously to tier 3. So what I recommend to self-employed persons is to do tier 3 with a good fund manager like Petra, good returns, and it's just like a pension. Do it for as long as you want. If it's more than 10 years, your money is available for you anytime you want. Only disadvantage is that you don't get the monthly salary in quotes that's need to give you, because your tier 3 will give you a lump sum money, right? So I'd have to ask, what I'm aware of, the experience I have is with people who are in the formal sector with SNIT. But I've seen several SNIT circulars ask people who are self-employed to come and sign on for tier 1. But I'm not too sure what the modalities around that are. But I know it's possible. So you might have to ask SNIT to see if you want to try that option as well.
Okay, all right. Thank you so much for that explanation. Thank you all for joining. It's been a pleasure having you on, and it's also been an honor hosting you, Michael. And thank you for the insights that you've shared. This brings us to the end of our session tonight. I hope that you all picked up something great, a lesson or two, and that should help you in your personal finance journey. Thank you once again, Michael, and it's been a pleasure having you. Good night, everyone, and see you when I see you. Yeah, thank you.
Thank you. Good night. Bye.
Bye.